Hey guys and girls, Nathan Birchy here, B.Invested headquarters, and today I've got a topic for you which is the benefits of refinancing. What are the benefits of refinancing? How can they help you? I guess there's two parts to this, so I'm going to break it down to 1 and 2, so which road we can go down to. So refinancing to pull out equity and refinancing to have a better loan. So let's look at the equity part first. What's the benefit to refinance for equity? So let's say, for instance, you got a property that you paid 500K for and it's gone up to 800K and your initial loan was 400K and your new loan's going to be 640. That means that there's 240K worth of equity. So what I just scribbled here, calculated in my head, 500 grand you pulled it for, now it's worth 800 grand. It's gone up. You had a loan at 400, your loan at 80% could be 640. That means there's 240 grand worth of equity in there. You could refinance the property, pull out 240K and either use that to buy 1, 2, 3, 4, maybe 5 properties, right? So if you have a property that's worth 500, revalue it for 800, 240K equity, buy 5 more properties, that's a cool position. Now people look at that and they're like, well, if I take 240 grand out, my loan's now gone from 400 to 640, my debt's gone up, paying off my debt, right? I'm going to be talking about the benefits of debt on the next video, so make sure you watch that one, right? But I'm just going to use some examples here, right? If you had to save 240,000, let's just take that 240 up here, 240,000. What would it take to save 240,000, right? It would take, you probably have to earn $400,000 before you get robbed from the state and you have to pay taxes. How long would it take you to save 400,000? Let's say you save 40 grand a year, 50 grand a year, that'll take you between 8 to 10 years, right? Now let's assume you go buy 5 properties today and they're 200K a piece, so you got $1 million worth of asset that you're buying. You take $1 million and over the course of the next 10 years it's going to turn into 2 million, turn into 3 million, whatever, right? Let's say it goes from 1 million to $2 million just for the fun of it, right? If you have to save the next 10 years to get that money, if you're lucky, what's that money going to buy you back then? That might only buy you 3 properties because these assets are going to be going up over that period of time. So you're getting the benefit of inflation and bringing that forward, right? Secondly to that, if you break it down the figures and go 240K, times it by, say, 6%, say 15K per annum, that's $300 a week. So if you pull out 240K, pay 6% interest on that 240K, you're paying 15 grand a year, $300 per week. Now, if you save $300 a week, that's only going to equal 15 grand a year. In 10 years, it's going to be 150K. In 20 years, it's going to be 300K. In 30 years, it's going to be 450K, right? So it's much longer, much harder to get there. So most people think, well, I don't want to pull out equity because I'm too scared of having more debt. Well, you want to take that cash and make it work for you, right? If you're not doing that, then you have a misunderstanding with how debt works and how money works, and that's why I talk about macroeconomics so much and the weird stuff that no one else likes to talk about because they don't physically, mentally understand how it works. The benefit of having that cash today is far greater in your possession. So debt, using that capital that you're pulling out as equity, as deposit to build up the wealth, that's the benefit just there, right? I think it's pretty obvious. Now, if you take the other side of the page and say, well, we don't want to pull out the equity, we don't want to get into that, then the better loan product. So when you're refinancing, there's so many loans out there. I think when I look at investors, their positions, they might have got a loan in 20, what was the last time you checked out your loan, right? Like you bought a property in 2010, 2012, 2015. I'm really going to fucking scare you guys here, right? 20, 20. If you got a loan in 2010, that was 15 years ago. You got a loan in 2012, that's 13 years ago. You got a loan in 2015, it was yesterday. No, it wasn't, it was a decade ago. It was 10 years ago. What happened in 2020? We had Corona happen, right? That was 5 years ago. 5 years ago. Now that it started, we're at 50 there. 5 years ago. How fast, how crazy is it that time has flown? Why do I keep writing 50? 5 years ago. Went to write 5 years. So the question that I ask is, if you got a loan 15, 13, 10, even 5 years ago, what does that look like? What does the product look like? What are the terms? What is the interest rate? What does that loan look like? Is there a position where you could restructure it and save yourself interest rate? Is there a way you could restructure it and pay it down much quicker? Is there a better loan product out there with offset facilities, etc., etc.? The products are advancing every year that goes by. You should be reviewing your loans on an annually basis, making sure that you've got the best products out there, the best position that you could be in, the best loan, as much equity that you can pull out. But reality is that you got a loan in 2020, that was 5 years ago that you got that loan. 2015 was 10 years ago. Fuck. Crazy. I'm just looking at it myself, thinking about it. Benefits refinancing. Make sure you're constantly looking at your loan product, seeing what you can do with it, seeing how you can improve it, how you can get the benefits, how you can reap those benefits. You save $200 over here, you can use that towards paying off your interest over there. Ultimately, just going back to this side, ultimately, if you pull out 240K worth of equity at 6% interest rate, you pay that 15 grand a year, that's $300 a week. If you buy 5 properties and they're positive cash flow $60 per week each, then those 5 properties are going to pay for the equity that you've pulled out. So have a plan, have a strategy, and if you need help on building out the portfolio, you know where to find us, 1300 367 925, admin at B.Invested.com.au. Click on the link wherever it is, book yourself in for a discovery session. Let's look at your loan structure, let's look at the opportunities, let's see what we can do to improve your end position. So thanks a lot for watching, folks. Have a great day. Bye for now.